Good evening, everyone. Welcome to tonight's BullCharts user group webinar for all users, remote users and non-remote. Please stand by. We're starting now.
Yeah, share, should I?
Yep. Now,
Am I?
while Phil's doing that, let me explain to everybody. And it is good to see so many people participating in the session. Thank you for joining. Phil has been one of our users participating in our webinar here for quite some time and has presented previously and shared some of his knowledge about bull charts and trading strategies and things. And some of what Phil does, some people would say is quite complicated. Complicated, advanced, quite technical. And a couple of you, I think, will be enthralled and very interested in some of the detail. And some of it might be a little bit above the heads of other people. If that's the case, please don't get too stressed about it or worry about it. I have suggested to Phil that we stop at various times, places through the session and allow you to ask questions. And please feel free to ask questions in the chat box initially. Do ask questions. We will see a lot of BullScript, some BullScript examples. So feel free to ask questions about bits of detail that you might see there, and we'll be happy to explain that. So Phil, are you ready? I can see your screen.
Yeah, I can't. This is my, can you see that screen
Yes.
there?
Yeah.
Okay.
That's the
yeah,
chart.
well,
All right, Phil, if you're ready, I'd like to make you feel very welcome in this small group and welcome you, and over to you. Thank you.
Okay, no worries, yeah. Okay, good evening, everyone. Yes, I'll present to you tonight my scan, which mainly focuses on spotting breakouts and unusual price movements. I'm mainly a day trader, but this can be adapted. My scan can be adapted to weekly trading as well. My chart isn't normally as cluttered as this. I've added bits and pieces to so that I can show you how the scan works a little bit. The important ribbon here is the one at the top. I call it my Go ribbon, Go for it ribbon, Go Score ribbon, which combines the next 7 indicators down below here to pinpoint entries. I'll just show you the scan itself briefly, just to show you how complex it is, so that, and then I'll go back to that initial slide and work my way through. As you can see, it's quite a complicated scan, very extensive, which I won't bore you with going through. Robert's got a copy of this, so you're welcome to that. And then right at the end is the guts of the business, is where I calculate the Go score here out of these 7 indicators. We'll come back to this later. I'll go back to the main slide, which is here. So, as I said, the top line is the important ribbon with the final results. If it's dark green, it's a very strong buy signal. If it's a bit lighter green, it's we're still in the running with a particular share. What it does, this top ribbon, is amalgamates all these 7 indicators below. And the first one is the EMAs, the exponential moving averages. Previous presenters have said they like to see the price trending upwards, and got all sorts of ways of doing this. I particularly like the EMAs. They're quite easy to calculate. And I use the 11, 26, 50 and 100 EMAs. You can see them on the chart here, different ones. If the color down below in this ribbon here is light green, very light green. That means the price is above at least one of these EMAs. If it's dark green, it's above all four of them. And so it must be light green. It must be above one of these EMAs to be considered for inclusion in my final GoScore ribbon at the top. The next indicator down is Heiken Ashi, which Alec introduced us to a few months ago. I've got the Heiken Ashi up down below here, and for the purpose of the GoScore indicator, it must be an up day. Heiken Ashi takes a lot of the noise out of standard Japanese candlesticks, which I quite like. I've elaborated on the candlesticks here. It just simply must be an up day. I fiddle about on the ribbon here. If it's got a little tail, there's weakness creeping in, which is reflected there in that light green. But simply put, the bottom line, it must be turned green, not red. The third indicator down is pivot points, which have been around for about 20, 30 years or more. I noticed Edwards and McGee were using them about 20 odd years ago. And I've got a slide here to show how they work, roughly. That's the formula there. Don't worry too much about that. The pivot point itself, which is the black line here, is actually the same as yesterday's typical price. It's yesterday's high, close, and low divided by 3. And these are the calculations for the resistance above and support below. I've excluded the support lines below just to save on the clutter. So there are 3 resistance points. The middle one, the dotted one here, is the one that I'm interested in, and the top one. To qualify for my GoScore final assessment, the price must be at least above the second resistance point, R2, which is there. You can see this is just keeping its head above R2. And here you can see it's actually closed above R3, which is very nice indeed. So to be included in the GoScore, it must be at least above R2. And this green in the ribbon indicates that. That's R2 and that's R3. Now the next 4 variables are quite complicated. So rather than work through the formulae, I'll just try to explain what they're doing roughly. Sorry, the 5th one down from the top is similar to the Donchian channels that David introduced us to a few months ago. And I've used them, I've adapted it a little bit to look for the midpoint in the previous week. I use a look back period of 5 days. So it's only an approximation. One of my charting gurus, a chappie called Gary Burton, very down-to-earth bloke, he liked to look back and find a significant tower candlestick somewhere in the previous 1 or 2 weeks, and he said the price must get over the midpoint of that significant candle, midpoint between the high and the low. I've fudged that a little bit and automated it by just looking back for a midweek point in the last 5 days. Doesn't matter whether there's been a tall candle there or not. And for the purposes of being included, the closing price must be above that green point. So that's why we've got the dark green bits here, is where that happens. The closing price is above a spot in the middle, midweek, middle of the previous week's trading. The next variable is quite complicated, is Darrell Guppy's countback lines. I gave a presentation on this last year, and I quite like them. I even use them in 1 minute trading sometimes. And the idea of the Guppy's countback lines is you look for a significant low point. I look for the lowest point in 5 days or even 10 days. I think Darrell looks back 20 days or even more, but I'm not clever enough to code that sort of thing. And then you take the lowest point, you look for the high of that low. I'll just expand this a little bit. You look for the lowest point, that's the significant low. Then you go up one and look for the highest, the next highest high, which is there. That's one countback line. He actually looks for 2 countback lines. And it's a way of finding out whether a share price has managed to escape from the trough, or at least is trading above the trough. So as you can see here, this one here didn't quite close above that high there. That's one countback line. Didn't quite make it. So that's why there's a white blank space there. But the next one along well and truly made it. It went past the 2 countback lines. So it's well on its way. So in the ribbon I've got here, if it's dark green, it's past 2 countback lines. If it's a lighter shade of green, it's still in contention, but it's probably only just crossed 1 countback line. Again, for the purposes of my GoScore, I just ask that it is at least above 1 Guppy countback line. So it's escaped any troughs and is not being dragged down. The penultimate variable is volume. I put a few bells and whistles on here with this volume, with standard deviations, trying to find extremes and so on. But basically, for the purpose of my GoScore ribbon, the criterion is it must be above the average 375-day volume. As simple as that. It must be showing anything green along here. I've chosen 375 days because I backtested 500 and 250, and I've even used 120 because that's what I ended up with using Excel at one point. But I sort of used 375 in quite a few of my other indicators, so it's an arbitrary figure, but I quite like it. And the last indicator of all is the disparity index. Again, one that David introduced to us a few months ago. It's a sort of a momentum indicator. It's based on the fact that how far away is the closing price drifting above or below its moving average. And I use an 11-day moving average, which I quite like through backtesting. And I smooth that 11-day moving average by 3 days. And I like to see the disparity index moving above the smooth disparity index. So the momentum is increasing slightly. To be included, it must be green here along the bottom. And one interesting thing I noticed was when it turns pink here, it's running out of steam, possibly running out of steam. When you look up here, you can see that the price is still rising, but the disparity index has dropped below its smooth, its 3-day smooth. So it's sort of divergence, that it's the momentum is decreasing a little bit. So I'm on my guard a little bit when that happens, looking for a correction. And it did actually go about 3 or 4 days later, but there was still a bit to go. So that's the those are the main variables I use. Just before we go to the scan itself, I was going to introduce a feature that I use quite a bit, using weighted scores. Robert demonstrated this last month using the inbuilt BullCharts creator, and I've got so rusty in using that, I'm so used to coding that, and sometimes you have to use BullScript within the creator itself. So I do apologize, but I'm using coding all the time these days. This is how you create a weighted score using BullScript. So the instance I'm looking at is the EMA variables, the ones in fact that I use in the GoScore, the 11, 26, 50 and 100. So first of all, so when I'm using EMAs, I think which one's the best one? You know, is it 26, is it 50, is it 11? So I thought, why not use all of them? And so that's what you can do with a weighted score. First of all, you have to define the things you want to weight. So this is my first one, EMA Y11. The Y doesn't come from BullCharts, it's just my way of naming the variable as yesterday's EMA. As you can see here, historical, moving average of the close of 11 days, exponentially. And the 1 indicates it's 1 day back, historically 1 day back. And don't forget to close the bracket and the semicolon. And similarly for 26 day, 50, 100. You've got to establish all your variables first of all. And now you take those and you can weight them and calculate a raw score. So you're actually combining all the moving averages. So you now have to define a new variable. I've called it EMA score, colon, equal sign, bracket 0. And what it's doing is this, it's saying the EMA score is 0, but if the close is above or equal to EMA 11, there it is, then give it 1 point. Otherwise, it gets 0, it gets nothing. And similarly, if the close is above the 26 day EMA, it gets 1 point, otherwise 0. And so on, the 50 day, the 100. Don't forget to close the opening bracket at the end there, and the semicolon to make it into a variable. So you've got a total score there out of 4. So you've sort of combined all those EMAs rather than just relying on one of them. And you can go further than that. If you like one particular EMA more than another one, you can increase its weighted value. So going back to this example again, there it is. I've decided that the close, it's the EMA 11 will only count as 1 point. If it closes above the EMA 26, 1 point. If it doesn't, it gets nothing. If it closes above the EMA 50, I'm giving it 2 points. Otherwise, it's nothing. Many traders seem to like these significant figures, 50, 100, 200 EMAs, so they sort of become self-fulfilling prophecies. And again, if you like the EMA 100, I've given it 3 points. So you now have a total total possible score out of 7. Okay. As you can see, when we look at the actual scan, I've used exactly the same principle of this weighting score. I've used it quite a bit throughout the middle of the scan, but the bottom line down here, you can see it's exactly the same principle as that brief example I've just given you using the EMAs to calculate the GoScore. I've made it into a variable itself. There we go, bracket 0, plus if it does this, 2 points. If it does that, 1 point, 1 point, 1 point, 2 points for the CBLs, 2 points for the EMAs, and 2 points for the disparity index, which I quite like. And then I run the filter itself, and I've used the threshold. The maximum you could possibly get out of this is 10. If you add up all those points, the maximum possible score is 10. Now that's something that it's not BullCharts suggested scoring, it's just my own preferences, the way it's worked out that way. So 10 is not significant at all, except it's a very nice round number. And I've said the GoScore itself must be above, to be included for consideration for eyeballing, must be above or equal to 7. That means approximately 70% of my favorite indicators must be positive. Right. Just one last slide, just to show you the techniques I use when I'm looking at the charts themselves. You can use this GoScore indicator, as I do, I've got it up here, to see which sectors of all the indices are on the move. It's sort of similar to like a do-it-yourself market map, which may indicate where all the action is that day. You can use the scan on end of day data for tomorrow's market, or intraday trading with live data, or BullCharts snap 20-minute delayed hourly data, which I use, which I love. And quite reasonably priced too. When I'm actually eyeballing the chart, whatever the scan happens to throw up, the final decision to buy rests on me looking at the chart. And I like double bottoms. I like that Dow theory is stepping up with higher highs and higher lows, as though the share is just begging to go higher and higher. I like to see a little bit of profit distance to the next support resistance level, or even blue sky. That'd be wonderful. I also like bullish engulfing and morning star candlesticks. And I just get a bit wary when the RSI 14-day is over the 65.70. But there's nothing to say, of course, that the share price can't rise even further than that. But I tend to go for the coming out of the dips and the swings, and especially when it's sort of crossing up from below 50% RSI. Okay, enough of that now. I'll go to the scan itself and see what we've got, whether we've still got the snapshot version or the end of day version. So here we go. All your own favorite indicators here. You can take some of mine out or add your own to suit yourself, to adjust the actual score, but there. Or you can run the scan from this little green arrow here, which we'll do now. It runs fairly quickly. What have we got here? Is this today's? We'll see. I'm using then when I've got the scan results here, I sort this column here, GoScore. So I'll get that out of the way now. So I get the best candidates here. I'll start working my way through these. I'll just look at 5 or 6, then pause for questions or take some of your favorite shares that you'd like to have a look at using the scan process. So just click on this and it comes up with my default chart, which will take quite a while to load the first time you do. So what I've done, because all I want to do at the moment, it's taken all the decision making about is this EMA up or that one up or CBLs, everything. It's amalgamated them all into this GoScore here. So I know I'm just looking at potential candidates. It's already loading, but what I've actually done here is I've created a little template which just looks at the GoScore itself and some of my scalping rock high indicators that I sometimes scalp a little bit of profit to cut down on my risk occasionally. It looks as though it's, yes, this is the end of day today data. We look there, yes, there it is, 22.3. So this isn't the snap data, it's today's end of day. If you look back here, it actually got pinged 3 or 4 days ago here as a possible goer. 3 days ago, a strong one. There's an ascending triangle there. It seems to have broken through. Don't know whether it will continue or not. It's like nice blue sky there. This line here is my disaster stop loss. It's actually a guppy one countback line downwards. And when I get a company I'm interested in, I buy in that day, and the next day I give it 1 day's leeway to trade down without hitting that severe stop loss. If it goes through that, I'm out. But if it corrects itself a little bit, I don't mind, as long as it doesn't penetrate through that. The third day, I do try treating it seriously. So just looking at some of these, I'll just look at 4 or 5 and then over to you. Oh, why is my... Oh.
Phil, before you leave that, AVZ, funnily enough, it came up in my scan tonight too. It's right on my radar. The fact that it's cleared $1 is always a very positive sign, and it's slightly above its previous high. And also those last 2 candles are making new 10-period highs. Which is what I'll be talking about somewhere down the track when I give my little. But I'm really impressed with the way you've come up with that. Yes, that's an interesting concept.
Thank you. Yeah, thank you. I'll just look at 2 or 3 more. I like BHP. That's a perfect example of this scan in action, because it was actually pinged there. If only I bought it, which I didn't. And now it's jumped up there. Very nice profit. Looks like energy's been all the go today. They've all been moving up. Just wait till that got pinged on the 18th here as well. There's a couple more. If something's on the move, the first day I buy something, I don't try and look for my scalping profits down here, this little thing down here. On the first day, I will do on the second day. I'll take a little bit of that profit. Now sometimes I'm a bit premature in that it might go way up here, but often I'm just reducing the risk exposure a little bit, because sometimes they can just go the other way. One more. Right, I'll leave it at that. That got pinged a couple of days ago as well there.
Bill, while we're waiting for questions, can you show us the scan again, please? And I
Right.
thanks, Phil. I thought it would be useful to point out for anyone who hasn't really seen BullScript much before, that in the script and in scans and indicators, what you can see there that's coloured in green in the curly brackets is actually text. So if a newcomer to script is looking at this stuff and trying to work out what's what, the green stuff that seems to be in English is actually the English description, just a comment about what's in the next few lines of code.
And the scan won't read that. It won't read anything that's in the curly brackets. We'll discard it. It's just for your personal perusal. But when the BullCharts is operating itself, it won't. It just ignores that.
Yeah, that's right.
Yeah.
Thanks, Phil. Any questions, anyone?
Robert, if no one else has got a question, I've got another one for Phil.
Yeah, David.
How does it handle stocks that are sort of doing a fairly steady trend up? Now, I'll give you an example. MLX, MetalX. Does it pick them up or not?
I just look at the top 100, 200. So I'll just put MLX. Just see
what it comes up with.
There we go. I don't know what what stage would it look? A nice sort of breakout period here.
Well, I tend to buy more. Well, it's in my portfolio because I've got it because it's trending up. But I just wondered if your system would pick it up, and obviously it has at quite a few places.
But in that I'm a day trader, sort of a very short-term trader, I would hopefully have bought it there and followed it up until I've got, this is my, I say, my disaster stop loss here, not disaster, but my serious one. I've got other ones I use. Yesterday's typical price is one of them. I skim a little bit off just to, and especially when that disparity index that you showed us starts to falter a little bit, I get a bit worried. I don't know whether I may not, I'd have to put the default chart up there. I could do to see whether, well, if we've got time, I don't know.
Well, no, that's fine. You've answered my question, Phil. So basically, you're really looking to try and buy at the bottom of that trend, of that uptrend, or channel, and get out at the top, righto.
Yeah, temporary top and then back in again. But I try to. Here in my scan, it also throws up a few little utility labels as well. I try to get in at 38% below the high of the day, halfway through the day, or a scan would be like after the first hour, and I'm sort of aiming for that price. I try to get in round about the middle, so I'm not buying top of the market, but of course sometimes you're being a bit too picky and the thing gets away from you. I also like, these are my sort of basic parcels of 5,000 and 25,000. I just, BullCharts will calculate that for me, so I don't waste time getting my calculator out. Other people's risk management, I could incorporate this into this as well. Perhaps I should do.
Phil, Robert again, while we're waiting for someone else to ask, I'd just like to clarify, you've got this scan. Do you run this once a day based on yesterday's end of day data and then look at the results and look at the eyeball the charts for those with a high Go score? Is that basically how it works?
Yes, I do. Sometimes they retrace a little bit the next day, and I think, hang on, there's something going on here, and I can get in a slightly cheaper price. But I mainly use it, the snap version here, when I look at around about 11:30. I'm sort of managing my positions from the first hour and a half, and then I use the snap version here, which is looking at using the snapshot. So I see what's happening, you know, what's happening in a live sense.
Mm-hmm.
So I'll try and jump on board on the day things are moving, and then sort of hope for the best that the next day it doesn't drop below my serious stop loss levels and carries on going up.
Yep.
If I get a little bit of a fright, the next rock high skimming indicator I get, I'll treat a bit more seriously and take some of these take some of the risk away. If I get a little bit of a fright, just while I'm there, I'll show you. It will run off the indices as well. And so as you can see, today all the action was round about energy and mining. So that's quite handy. It's just like a mini market map.
Very good.
Quite complex, but it takes a lot of the decision making out of my hands. Like not really a black box, because I have to make the final call myself. But it just, you know, doesn't confuse me with this EMA or that EMA or
it's more mechanical.
Count back lines. It's more mechanical, automated.
Yep.
Yeah.
Phil, while it's a break, I should mention too, for everyone's benefit, that some of what they've seen tonight, they might perceive as being far too complicated, and that's okay, because some of the advanced users will be able to readily comprehend what we're looking at, and the many ribbons you had on your chart earlier. There's still some benefit, I think, even for those people who might be struggling a little bit to understand what's going on here. Yeah, that's the one. Even if people looked at the script is fairly well laid out with blank lines, so that there are blocks of code and lots of good comments. So Phil's done a good job of doing that. So even anyone starting out with script or trying to go forward with script, it'd be useful to have a look at it and try to make some sense of some of the bits in there, because you never know, it might be useful. And you might be able to pick some ideas out of there. Now, don't forget, looking at the ribbons Phil's got there, the top one he said was his ultimate go, the bottom line for all of the aggregation of the other ribbons. And the others include one that aggregates together what he's seeing in the EMAs, the Heiken-Ashi, and a few other things as well. So different bits of the code. Phil, those ribbons, they're not defined in the scan, are they?
No, they're not. They're just for my display purpose.
Yeah.
I want to look at them all.
I'm wondering if anyone might find them useful. I
think it's this one. I've sort of automated it a little bit to create using. I'm using an 11-day average. So I'm using 11-day average of the disparity, and I've worked out when is an extreme point, this green line at the top, and when is an extreme point down. And I like to see it, as I said, to be included in this Go score, I like to see it, the actual 11-day DSI moving above the 3-day smooth version of that. And when it drops below, I think maybe the momentum's losing it a little bit. So you might be the coding for that. I could send you that so that you can
Yeah, that'd be good. Yeah, thanks.
There you go.
Phil,
Okay.
have you tried this on a weekly basis? Does it work on a weekly basis or more?
Yeah, I should. Yeah, I could show you that. Yes, I'm not. I can't get my head around trading weekly, but I'll just BHP weekly here. And you can see it still works on a weekly basis.
Yeah.
Here, got the bottom of a nice little run up there. But I don't know how to trade weekly. I don't know whether I'd get in on a. I suppose if it's showing up here on with incomplete weeks, or is it is that a rolling weeks? Is it?
Yeah.
And I don't know whether to get in on a Monday morning, a Wednesday afternoon, or a Friday afternoon to buy, or whereas I'm sort of used to the natural rhythm of the daily market.
Well, fair enough.
Why I trade on a daily basis. Yeah. But yeah, it does seem to work very nicely on a weekly basis too. Yeah.
Phil, I've got one more question.
Yeah.
I've found over the years talking with people starting out in trading and starting out with learning about technical analysis, I've found that a lot of them strive for perfection and 100% accuracy regarding a trading system. And
yeah,
they can't get 100% accuracy with their wins, and they feel devastated until we tell them that no one ever gets 100%. And the ratio of wins to losses can be a lot less than that, and we can still be successful. So I'm wondering what you have found with your experience with this system, how accurate you've been in terms of, or how successful in terms of wins and losses. So Phil, I think you're saying that it's not 100% successful in terms of anticipating winners.
No, as you can see here. Let's see here. Let's see. Look there, BHP, way back 6th of January. January. If you had exercised your stop losses,
minimize the loss. Yes.
Minimize the loss, but if you didn't, you've been following it down. Go back. Oh, we're in COVID time. Oh, this is the weekly one, isn't it?
Yeah.
Yeah.
So it's important to have a good stop loss method and to use it, minimize any losses.
Yeah.
Yeah. Yeah, that's a good lesson too for the novices.
Yeah, just play the averages. You've got a sort of a winning. It's like knowing your horse flesh, I suppose. I don't at all. I've got a mate who's an expert at the horse track, and I said they all look the same to me. You know, 4 legs and a tail.
That's right.
But if you actually put the odds in your favour by using indicators, you can see what's performing well, what's got a sort of track record. And if it falls at the first fence, you can be out of it.
Yep. Okie dokie. Bill, is that all you've got?
That's all. Yes.
Yep. Very good. Any last questions before we wrap up and move on to the next item, which is getting towards the end of the session? Last minute questions.
Alan, can I ask a question?
Yeah, Alan, go ahead.
Phil, I think it's a very good system. Just a quick question. Have you tried this on the short side? Would it work if you reverse the code? Could you trade the short side as well?
Yes, you could. Yes.
Have you ever tried it?
I haven't tried. I have tried bits of it, but I haven't completed the whole. One of the views of presenting something to somebody else that you try and perfect it, but I haven't looked at the short side, and I'm pretty sure it would work on the short side too. But yeah, I'm sure it could be coded for the short side as well.
Yeah. Oh, no, that's good. Thank you for that.
No worries. Yeah.
Yeah, just Phil, I love the approach. I think it's really terrific. I'm not sure whether my coding skills would keep up with some of this, but I certainly intend to have a closer look at it. But I like the way you've got all the data collected so that you've got all the information you need to actually select the items you want to eyeball. And I love the use of the coloured ribbons. I think they really do make life a lot easier when you're trying to make some of these decisions. So congratulations on the approach. I think it's terrific.
Okay, we're done. Thank you, Phil.
Very
That's
good.
been very good. Thank you
No
kindly.
worries, yeah.